Welcome to today's financial brief. We're going to dive into four massive forces that are really shaking up the global markets as we speak. We'll look at how AI is completely transforming the world of banking, what China's real game plan is with digital currency, whether we can expect that classic holiday rally, and the geopolitical storm brewing in the oil industry. So what's really moving the needle in the markets right now? We're going to tackle four big questions. Are banks basically just becoming tech companies? What's the real story with China, gold, and Bitcoin? Can we actually count on that end-of-year stock market pop? And why are oil prices under so much pressure? Let's kick things off with the AI revolution that's happening inside our financial institutions. All right, first up, banking. There is a huge transformation happening right now, and it's all being powered by, you guessed it, artificial intelligence. And we're not just talking about some new software here. This is a fundamental overhaul of what a bank even is. At its core, the idea is pretty simple. To survive and compete, banks can no longer just be about money. They're in a race to become AI-driven technology companies. And honestly, those that can't make this leap, they risk getting left behind. And listen, this isn't some far-off prediction. It's happening as we speak. You've got giants like JP Morgan already turning investment funds into digital tokens on the blockchain to make them easier to move around. At the same time, BBVA is getting ready to deploy what they're calling an army of AI agents. The pace of this is just incredible. So what in the world are these intelligent agents? Well, think of them like AI employees that work on their own. They can analyze the market, gather all the necessary information, and then make decisions and take action to hit their goals, all without a human operator in sight. And this immediately brings up a massive question. If these super efficient AI agents are the new workforce, what happens to all the people who do those jobs right now? It is a huge challenge that the industry and, frankly, governments are going to have to figure out, and probably sooner rather than later. Okay, for our second question, let's pivot over to Asia and dig into China's strategy in the world of digital assets. There's a popular theory floating around about what they're up to, but the reality is probably not what you think. So there's this rumor that just won't die, that China is secretly buying up tons of Bitcoin to try and corner the crypto market. But if you actually look at their actions, a totally different picture starts to emerge. So here's the bottom line. China's real focus isn't on Bitcoin. What they are doing is using their enormous trade surplus to buy up staggering amounts of physical gold. The end game here seems to be launching their own digital currency, the digital yuan, and using that gold to give it legitimacy. So this isn't a fight against Bitcoin. It's a strategic move to challenge the US dollar's dominance. Moving on to our third topic, let's talk about a classic stock market pattern. As we head towards the end of the year, a lot of investors are asking the same question. Are we going to see the traditional holiday rally? So first off, what is the holiday rally? You might have also heard it called the Santa Claus rally. It's a well-known tendency for the stock market to rise over a specific 7-day period, the last 5 trading days of the year and the first 2 of the brand new year. And this isn't just some old Wall Street superstition. History shows this pattern is actually pretty reliable. In years where the market isn't already in a nosedive, this rally shows up about 75% of the time. So yeah, the odds are usually pretty good. But here's what might be even more important. What does it mean if the rally doesn't show up? Well, when Santa fails to visit Wall Street, it's often seen as a big red flag. It can signal that there's some underlying weakness in the market that could spell trouble for the year ahead. It's a really important signal to keep an eye on. Okay, for our final topic, let's turn to the global oil markets. Right now, we're seeing a perfect storm of factors that are all pushing prices down. The price drop really boils down to that classic economics 101 problem, supply and demand. On one side, you have a massive oversupply of oil. We're talking tons of tankers just sitting at sea, full to the brim. On the other side, demand is weakening, especially from China as its economy slows down. Too much product, not enough buyers, prices have to fall. And this situation is putting a serious squeeze on oil-producing countries, particularly Russia. I mean, look at these numbers. The global benchmark, Brent crude, is at about $58.50 a barrel. But because of discounts, Russia's own Ural's oil is selling for just $45. Now, here's the kicker. Their cost to even produce that barrel is somewhere between $40 and $45. You can see the problem. Their profit margin has basically vanished. It's razor thin. And none of this is happening in a vacuum. You've got other geopolitical forces at play. Saudi Arabia is already future-proofing its economy with its Vision 2030 plan to rely less on oil. At the same time, the U.S. is tightening the financial screws by blockading sanctioned oil tankers, a move that directly hits the wallets of countries like Venezuela and Russia. So, when you pull it all together, from AI rewriting the rules of banking to the geopolitics of oil, it's so clear that today's markets are this complex, tangled web. Technology, national strategies, global power plays, they're all connected, which really just leaves us with one big question to think about. In a market getting pulled in so many directions, where's the next big shock going to come from?